Imagine telling someone in 2019 that just a few years later, buying an average home would require an income far above what the average household earns. They probably wouldn't believe you. After all, homes are supposed to become more affordable when fewer people are buying them. That's how markets work. Less demand should mean lower prices. But something strange happened. Home sales slowed dramatically. Millions of buyers disappeared from the market, and yet prices barely moved. In some areas, they are still near record highs. So what exactly happened? Why does it feel like everyone wants to buy a home, but almost nobody can afford one? And perhaps the most important question of all, will things get better? Today, we're breaking down the housing market in plain English. No industry spin, no complicated jargon, just the real story behind why housing feels so broken. Chapter 1: The Perfect Storm. The current housing market wasn't created overnight. It was built through a series of events that stacked on top of each other like dominoes. First came historically low interest rates. When mortgage rates dropped to levels people had never seen before, monthly payments suddenly became much cheaper. A family that could previously afford a $300,000 home could now qualify for a much larger loan. That sounds great, and for a while, it was. But there was a problem. More purchasing power didn't create more houses. Instead, it created more competition. Suddenly, buyers were bidding against dozens of other buyers. Prices started rising, then they kept rising, then they exploded. Chapter 2: Everyone wanted more space. At the same time, people's priorities changed. A home wasn't just a place to sleep anymore. It became an office, a classroom, a gym, a meeting room, a place where families spent nearly every hour of the day. Small apartments that once seemed acceptable suddenly felt cramped. People wanted extra bedrooms, home offices, backyards, more space. Millions of households began searching for larger homes at the exact same moment. Demand surged, supply couldn't keep up, prices climbed even higher. Chapter 3: The Rate Shock. Then came inflation. As prices rose throughout the economy, policymakers responded by increasing interest rates. Mortgage rates moved upward, fast, very fast, and that's when affordability collapsed. Most people focus on home prices, but monthly payments matter more. A house doesn't have to become more expensive to become unaffordable. A higher interest rate can do that all by itself. For many buyers, the payment on the same home suddenly increased by hundreds or even thousands of dollars each month. The dream of homeownership moved farther away. Chapter 4: Why Prices Didn't Crash. Here's where things get weird. Normally, when buyers disappear, sellers lower prices. But that didn't happen on a large scale. Why? Because homeowners became trapped. Imagine you bought a house when rates were incredibly low. Now imagine moving means giving up that mortgage forever. Would you want to trade a low payment for a much higher one? Probably not. Most people wouldn't. So they stayed put. That decision removed millions of potential listings from the market. Fewer buyers, but also fewer sellers. The result: a frozen market. Chapter 5: The First-Time Buyer Crisis. The people suffering most are first-time buyers. They don't have equity from a previous home. They don't have a low mortgage rate to keep. They are starting from scratch. Many are doing everything right, working hard, saving money, avoiding debt, building credit, and still finding themselves priced out. The challenge isn't always poor financial decisions. Sometimes the math simply doesn't work. When housing costs consume too much income, ownership becomes difficult no matter how disciplined someone is. Chapter 6: The Hidden Shortage. Many people think the problem began recently, but the roots go back much further. For years, the country built fewer homes than it needed. Builders slowed down. Construction costs increased. Regulations became more complicated. The result was a shortage that grew year after year. Then demand exploded. A shortage that had been quietly building for years suddenly became impossible to ignore. And shortages have consequences. When there aren't enough homes, competition intensifies, prices rise, affordability falls. Chapter 7: Is this another 2008? Whenever housing becomes a major topic, one question always appears: are we heading for another crash? The truth is that today's market looks very different. The last major housing crisis was driven by risky lending and widespread financial instability. Today's situation is different. Many homeowners have substantial equity. Lending standards are generally stronger. Most owners aren't being forced to sell. That doesn't mean housing is healthy. It simply means the problem is different. Instead of collapsing, the market has become stuck. Chapter 8: What happens next? Everyone wants a simple answer. Will prices fall? Will rates drop? Will homes become affordable again? The reality is more complicated. If rates fall significantly, more buyers may rush into the market. That could increase competition. If rates remain high, affordability remains challenging. Neither outcome creates an instant solution. The most likely path may be a slow adjustment over many years, not a dramatic crash, not a magical recovery, just a gradual process of incomes, inventory, and affordability moving back toward balance. Final thoughts. If you've been frustrated by the housing market, you're not imagining things. The numbers feel difficult because they are difficult. The market isn't functioning the way many people expected. But understanding the problem is the first step toward making better decisions. Don't buy because everyone says you should. Don't rent because someone says ownership is impossible. Run your own numbers. Know your budget. Think long term. And remember, the best financial decision isn't the one that looks impressive. It's the one that works for your life. Because in a housing market this complicated, patience and good math can be more valuable than perfect timing.